Commercial line of credit real estate, top commercial equity lines for commercial real estate. Call 888-653-0124 today or click the link in the description to learn more. Are you looking for the best commercial real estate loans? If yes, then you have come to the right place. In this article, I am going to share some of the top commercial equity lines for commercial real estate. We consider commercial real estate as one of the safest investments. This is because the value of the property does not fluctuate much over time. The only way to increase the value of the property is through renovation or improvement. Commercial real estate loans provide capital to investors who want to invest their money into commercial properties. Banks and other financial institutions usually issue these loans. They offer a variety of benefits, such as fixed interest rates, flexible repayment terms, and low down payment requirements. How does a commercial line of credit work? A commercial line of credit is a type of loan that allows businesses to borrow money for short periods of time. The borrower pays interest on the amount borrowed, and the lender charges interest on the total amount borrowed. When a company needs cash, a commercial line of credit may be the answer. A commercial line of credit is usually used when a business needs access to funds quickly, but doesn't need to pay back the entire loan right away. Businesses use commercial lines of credit to cover expenses during slow times, such as when a product isn't selling well or when there's a seasonal slump in sales. Companies often use commercial loans to finance equipment purchases, advertising campaigns, and other investments. To qualify for a commercial line of credit, companies must show that they're able to repay the loan. This means that they must have enough income coming in to cover the costs associated with repaying the loan. If a company can't prove that it can afford to repay the loan, it won't be approved. Commercial lines of credit are available through banks, credit unions, and other financial institutions. Companies typically apply online, and lenders review your lock application within 24 hours. Once a company receives approval, it can draw down the full amount of its loan at any time. However, if a company draws down too much money, it risks defaulting on the loan. Defaulting on a commercial line of credit can lead to serious consequences. Lenders may charge application fees and penalties and even seize assets. Lenders may also report bad debt to credit bureaus, which can hurt a company's reputation. Some states require businesses to maintain minimum levels of capital in order to operate. Companies that don't meet these requirements risk losing their licenses. Advantages of using a commercial line of credit. There are many advantages to using a commercial line of credit instead of traditional financing. First, there's no need to pay interest when you use a commercial line of credit. Second, you can borrow money, regardless of whether you're making money or losing money. Third, you can borrow money for any purpose, including buying equipment, paying bills, remodeling, or investing. Fourth, you can borrow money from multiple lenders simultaneously, allowing you to spread out payments over several months. Fifth, you can borrow money in increments as small as $1,000. Finally, you can borrow money up to 100% of the value of your property. If you decide to use a commercial line of credits, be sure to shop around for the lowest rate possible. And remember, you can always refinance later if rates drop. Drawbacks to using a commercial line. There are drawbacks to using a commercial line of credit, but there are benefits too. First, a commercial line of credit is usually cheaper than a traditional mortgage. Second, a commercial line of credits allows you to borrow money for any purpose, including buying real estate. Third, real property secured a commercial line of debt, meaning that lenders require collateral, such as land or buildings, to back up the loan. This means that if you default on the loan, the lender can seize the collateral. However, there are some drawbacks to using a commercial loan. First, commercial loans typically come with higher interest rates than conventional mortgages. Second, commercial lines of credit are often harder to qualify for than conventional mortgages. And third, commercial lines of credit may not be available in every state. Why use a commercial line of credit? Why not? For real estate investing, there are two types of investors: those who use cash and those who use debt. Cash buyers purchase properties outright and pay cash for them. They're usually motivated by profit margins and tax benefits. They often invest in rental property because it's a great way to build wealth quickly. Debt buyers borrow money to finance their purchases. They typically buy multiple properties at once and take out a loan for each property. Tax advantages may motivate them, but they need to generate monthly income through rents. If you're looking to build wealth through real estate, consider using a commercial line of credit to fund your investment strategy. With a commercial line of credit, you can access funds when needed to purchase properties. The interest rate on these loans is lower than traditional mortgages, and you can repay them over time. You can also use a commercial line of credit as a tool to help you diversify your portfolio. This means you can spread your risk across different investments, including real estate. Using commercial line of credit investment for your next project. If you're looking for a way to fund your next project, consider a commercial line of credit. With a construction funds, you borrow money against your home equity, and use the funds to pay off your debts. This makes it possible to finance large projects without selling your house. When you take out construction loans, you typically agree to repay the loan over a set period. The interest rate charged varies depending on the type of loan you select, and the length of the repayment term. Some mixed-use building loan offers fixed rates of interest, while others may fluctuate based on the amount borrowed. Repayment terms vary, too. Some loans require monthly payments, while others allow you to spread the payment over several years. To qualify for this type of financing, you must be able to prove that you own your home free and clear. You also need to show that you have enough cash flow to cover the costs associated with repaying the loan. Once approved, you can apply online at any bank or credit union. Once you've been accepted, you'll receive a letter stating the amount of the loan, the interest rate, and the repayment schedule. After you've taken out real estate lines, there are two ways to invest the proceeds. You can either use them to pay down existing debt, or you can put them toward a new investment. Consider using the money to pay down your mortgage if you're planning to sell your home within a few years. However, if you plan to keep your home for many years, investing the money in a new property could provide a better return than paying down your mortgage. Another option is to use the money to purchase another asset, such as a car or boat. If you don't already own these items, this would be a great opportunity to get started. Finally, you can use the money to build up your savings account. After all, you won't earn interest on your savings, but you'll still reap the benefits of compound interest. As long as you meet the requirements for these business lending options, it's easy to obtain financing. You just need to find a lender who accepts your application. When will my money be available? Call 888-653-0124 today or click the link in the description to learn more.